There's a pattern most people don't notice. Every time oil prices surge, the global auto industry gets reshuffled. And right now, it's happening again. But this time, the winner might be Chinese electric vehicles. Think about the last time you filled up your car. Did it feel noticeably more expensive? That's not just your imagination. With rising geopolitical tensions, especially in the Middle East, oil prices have been climbing fast. Brent crude has already pushed past $110 a barrel. And for everyday drivers, the impact is immediate. Gas cars are getting expensive to run. So the real question becomes simple. If driving a gas car keeps getting more expensive, what's the alternative? To answer that, we need to go back in time. In 1973, the world went through a major oil crisis. Oil prices didn't just rise. They quadrupled. In the US, gas stations were packed. Cars lined up for hours just to refuel. And here's the key detail. At that time, American cars were big, powerful, and extremely fuel-hungry. Suddenly, owning those cars became a financial burden. And that's when Japanese automakers stepped in. Companies like Toyota and Honda offered something very different. Smaller cars, lower fuel consumption, much cheaper to run. Consumers switched fast. By the late 1980s, Japanese brands had taken nearly one-third of the US auto market. High oil prices didn't just hurt American cars. They created global winners. Now fast forward to today. The same story is playing out again. But the main character has changed. This time, it's Chinese EV companies. Brands like BYD, NIO, and Zeekr are entering the global market at speed. And they come with three very clear advantages. First, no fuel cost. Second, advanced technology. Third, competitive pricing. Here's a simple way to think about it. Most of the world is still cooking with expensive gas stoves. China just showed up with a high-tech microwave. It's cheaper to run. It's smarter. And it's more efficient. And when that kind of gap shows up, something interesting happens. Even countries that used to resist Chinese EVs are starting to soften their stance. Not because they want to, but because consumers want to save money. And the numbers are already showing this shift. By 2025, electric vehicles are expected to reduce global oil demand by about 1.7 million barrels per day. That's roughly 70% of Iran's oil exports. At the same time, energy importing countries could save around $600 billion every year. Now look at China itself. More than half of all new car sales are now new energy vehicles. That means 1 out of every 2 cars sold is electric or hybrid. At that scale, it's not just a trend. It's a structural shift. So what looks like an energy crisis on the surface is actually accelerating something much bigger. High oil prices are weakening gasoline cars. And at the same time, they're pushing electric vehicles forward. 50 years ago, oil shocks created Japanese auto giants. Today, history might be repeating itself. But this time, the companies taking over the road could be Chinese EV makers.